How's it going, everybody? It's Stas here, and in today's video, we're going to be doing an overall market update, breaking down the Dow Jones, the S&P 500, and the Nasdaq. We're also going to be doing a trading update, talking about what I personally did in the markets today, plus a bunch of stocks and ETFs that I'm watching and that I'm looking to trade, and some that I'm looking to buy here for the long term, heading into this month of April in 2020. And in general, I want to go over some technicals here and determine with you guys and give you all my opinion whether or not the bears are back in charge or if the bulls are still in charge of the overall markets at this point in time. So hit that like button for me. Consider subscribing to the channel if you want to see further content like this. That is, if you enjoy this video later on in the video. And consider joining our Discord group chat and our Facebook group. Link down below in the description box. Those are free of charge, and I guarantee you guys will find a bunch of value in those communities. So let's just get right into it. Let's start off with the S&P 500, which you guys can see on this chart ended up closing down $88 today, down 3.37%. And this ends that three-day rally that we saw that was a historic rally. If I'm not mistaken here, the S&P rallied 17 points in 3 days, which is the biggest three-day rally since we saw in the Great Recession back in 2008. And if you guys don't believe me, take a look here. If you take a look at this little trend line, you can see it's pretty much 17% on the dot from this double bottom to this peak that we saw yesterday. And as of now, 2600, 2580, 2600 is a pretty strong level of resistance for the S&P 500. And you guys can see it here. And this goes back to what we talked about a couple videos ago when we were talking about this range, the range from 2450 up to 2580, 26-ish hundred. That's exactly where we're trading yet again, right? We're right in the middle of that range with today's dump off. And the 2600 level, the fact that we didn't close above it means that's kind of a strike on, or that's a point rather, on the bears side, right? The bears are winning over the bulls in that perspective, from that perspective, because again, we got really rejected pretty hard there. We didn't break above, right? If we closed above it, that would have been a point for the bulls. And if we pull back a bit, this hourly chart, we can see this is slightly looking like a head and shoulders forming, kind of, especially if we get a dump off on Monday on the S&P here in the past 2 days of trading, 3 days of trading. You can see the left shoulder here forming, the head, and with today's sell-off and kind of dump towards the end of the day that we saw on the intraday chart, that's kind of the formation of the right shoulder. And especially if we dump on Monday, let's say we do something like that, that's going to solidify a major resistance under that 180 SMA that we also talked about, in previous videos. So at this point, judging on the S&P, the technicals really are telling me that the bears are slowly taking over. And you can see the head and shoulder forming even closer here, and especially if we dump off and try and retest that 2450. And that's not to say that the bulls are completely gone, because again, the truth is we're up still about 15% over these past couple of days. But what would really lead me to think that the bears are fully in charge would be if the S&P broke 2450. Guys, if we broke 2450, this support and that 50 SMA, technically speaking, I would think we would go back down to test that lower low, that low being around 2190. I could definitely see that happening. But the funky thing is, looking at SPY here, SPY still looks like it's bullish. The bulls still look like they're in charge here. If you look on the hourly chart, You can see this downwards channel that I drew. It was pretty much trading perfectly within that over the past couple of weeks as we were selling off. And yesterday we got that bull pull, massive move here. We broke out of that channel, and this could actually be a bull flag at the end of the day, right? The pull, we sold off a bit, heading pre-market and into today's session. But overall, we're still holding the uptrend, being the trend line here. You can see it clearly. And this 50 SMAs. So honestly, guys, I like to look more at SPY versus the S&P, but either way, I'm looking at both throughout the entire day. And for the SPY here to be back in bearish territory, we're going to need to see a full break below 252. You guys can see 252 is kind of where we held today, so 252 needs to break. And from there, back on that 20-day chart, if we start to get closer to, let's say, the mid-240s, maybe back into the low 240s and back in this overall downwards channel, that's going to be full bearish territory, right? At that point, we may be pushing down to test that lower low, maybe being around 210, maybe 209, 205, and that's if the markets do end up slipping up, getting bloody again, and going through another phase of selling. And we'll see, only time will tell if that ends up happening, and I'm kind of just waiting to see next week in terms of that to see what happens. And if we take a look at the Dow, guys, down 915 points today, down 4.06%, and you can see the bears are slowly taking over here. 180 SMA acting as a resistance on this hourly chart. We made a lower high today, based on yesterday's high. Yesterday's high was at 22.5. Today's high was at about 21.9, more like 22,000. So the downtrend, a descending pattern, could slowly be forming here, especially if we dump off and maybe slowly head back into the high 19s next week, 19,500, 800, whatever it may be. That would mean, for me, the downtrend, the lower low is probably going to push. We're probably going to push down for maybe a new low in this bear market that we're in. And remember, I said this yesterday, guys. Every bear market, well, I don't know if that's true based on statistics, so don't quote me on that. But typically in bear markets, we see mini rallies in the bear market. And this very well could have been one of those rallies, because we know, fundamentally speaking, things are not miraculously better just because the Fed is putting money into the economy. It's not true, right? We're still going through a lot of pain in the short term. We obviously saw the unemployment numbers, and who knows, next week's numbers could be even worse. So, guys, pain could still be in store. That is kind of what I'm trying to say here. And if we take a look at the NDX, the Nasdaq, same thing with the S&P and the Dow. 180 SMA acting as a resistance. We're slowly peaking below a key support here at 7,600. Down almost 4% today, down 308 points. So watch out. Watch for these Sunday futures. If we're gapping down aggressively, you know pretty much that we may be going down further on Monday, right? That's what that could signal. And of course, Monday morning, if the large caps are bleeding early in the morning, we could expect a drop in the morning on Monday. So that's kind of what I'm preparing for. Am I 100% positive that's going to happen? Absolutely not. This very well could launch up on Monday. Nobody knows. But the truth is, you have to be prepared for either scenario, whether the market pops or whether the market goes down, right? You have to have a strategy for both scenarios. So let me know down below in the comments, guys, what are your thoughts on the markets? Are the bulls in charge? Are the bears in charge now? I would love to know what you guys have to think, so drop that comment down below. So for me today, it was a pretty slow day when it comes to trading. And do you guys remember that gold ETF I mentioned GLD, well, that's what I ended up trading today. It was a pretty small move, but nonetheless, I came out on top and I made a profit. And GLD, it's really a way to own gold through an ETF. That's kind of how I view it, right? And with metals at this point in time being pretty much wiped out when you're looking at the major dealers out there, although I did purchase 2 separate occasions, that's a whole different story. Expect a video on that when I do end up getting the physical gold. I want to do an unboxing video. Despite them being, I got sidetracked there. What was I saying? Despite them being sold out, you can still hold gold technically by buying this ETF. And you can trade the fluctuations of gold by trading this ETF. So for me, I ended up getting in on one of these pullbacks. This was like 5 textbook pullbacks, dips in a row here, pretty much like 6. And I was in it towards noon. And you guys can see right around noon, we got that dip from about 153 down to about 152.75. And the truth is, this thing doesn't move like crazy. The move it made from bottom to top today was not even 1%. So if you're trading with a smaller dollar value, not to discourage you, but if you're trading with $1,000, this may not be meaningful profit to you. But then again, you shouldn't focus on that. You should focus on percentage. But if you're trading with a larger dollar value, let's say $15,000 to $20,000, maybe $25,000, this could for sure be of value to you, because if you're going in with that type of size at 12 o'clock, let's say like I did, it dipped down to about 152.70. My order was at about 152.80, right around here. So if you're going in with that type of size and selling out where I did, which pretty much we popped up here to the higher high, I put a little limit sell at about 153.15. If you're doing that type of move, you can make, well, let's see the percentage here first and foremost. It's about 0.25, right? 0.25. So what is that on 20,000? I can't even do the math on that right now. That is close to about 1%, maybe like $150 to $200. So you guys understand, you have to, see these different trades or these different stocks and ask yourself, is it worth kind of what you trade with in terms of the percentage that you can make based on how quick you want to grow your account. It's all a personal basis here based on your goals and how you want to trade. So for me, that's what I ended up doing today. It really wasn't a big day at all for me, honestly. But nonetheless, profit is profit, and I'm happy that I had a green day today, because this week I didn't trade for 2 of the days. So it's a good time to make some profits, right, guys? So let me know down below, what are your thoughts on that? What are your thoughts on the markets again in general, and any moves, any stocks that you've been buying? So let's just run through now a bunch of stocks that I'm watching rapid fire in this market. Amidst the craziness, amidst all of this nonsense, not that it's nonsense, but just everything that's been going on, right? Causing all these stocks to go haywire, to go bananas. So the first couple that I'm keeping my eyes on are still going to be those conglomerates. Apple, we got news that they're delaying their iPhone 5G, their production, their launch, all of that. That is not too good for Apple. And you guys can see it was down 4% today. And it's been struggling, obviously, ever since this craziness happened. And for me, guys, I see further downside for Apple. We can see the downtrend is clearly still intact, especially if we start to dip back into the 230s, maybe below this 50 SMA. There's going to be a lot more downside for Apple. And you'll notice a lot of the same with some of these other tech names, right? Although Microsoft, the technicals do look a bit better in terms of being above the moving averages, Although it was Apple was above both of them. Let me see. Yeah, Apple's above the 50 SMA, but barely. So I guess MSFT does look a bit better, but nonetheless, it's still downtrending as well. Still down about 4% today, right? Facebook down 4%. It's struggling to get above 160. Major resistance there. If we fail to hold 155, this thing could very well be going back down into the 140s this upcoming week. And that's, again, if the markets in general do see a dump off here. Let's take a look at some other spec plays like space, SPCE, Virgin Galactic. This is an interesting one. Down about 9.85% today. Might as well call it 10%. Down $1.70. And in general, guys, I'm keeping an eye on spec plays like this because I've mentioned on this channel, it's funny the way the market works sometimes. A lot of the big names, the blue chips, they're getting crushed. The markets in general are down. And then you have that one little outlier that is somehow green. And space, SPCE, sometimes is that outlier. We sometimes see Tesla be that outlier. We see sometimes little names like little stocks, smaller stocks, not to belittle the stocks, right, guys? Like NIO, we see sometimes this one's green when the markets are red. So for me, it's fun keeping an eye on more speculative stocks, smaller cap investments, let's put it that way. Another one that I'm watching that did well today is ACB, Aurora. This one was up 14% today. And let me double check, what was the catalyst on that? I'm not too sure. I forget. It's slipping my mind right now, but take a look into Aurora. I know they had a good catalyst earlier today that obviously caused their stock to go up 13 cents, which for a penny stock, that's a pretty big move. So I'm keeping an eye on ACB. And another MJ play is CGC. This one is down about 4% today, but in general, it's up $5.50 per share just in the past couple of days alone. So this one's looking like it's forming a V-shaped recovery, but don't get ahead of yourselves. I'm not getting ahead of myself either. It's still downtrending overall. So we could very well continue this dump back down. Some other big tech names, Netflix today was down 1.62%. Not much movement there. Google down $51. Down about 4.39%, so a bit more movement there for Google. Amazon down about $56, down about 2.83%, and you can see very clearly here, guys, triple top on Amazon. This thing, technically speaking here, is headed back down. It seems like it is, rather, right? And especially if we do something like this, where we end up dumping back into the 1800 range, back into that 50, or rather under that 50 SMA, we're going to see some more red in Amazon, in my personal opinion. Another one is CCL. CCL is slowly looking like it is starting to head back down 20% today. This is one that if you pick it at the right time and swing trade it like some people did in the past couple of days, you can make a lot of money. But it's one of those that you have to be careful, because when it turns down heavily, right? Because obviously the cruise line stocks are heavily affected now, so be careful with those guys. So in general, I don't want to keep this video too long, so that's pretty much it. I got everything out that I wanted to talk about, kind of the Bears versus the Bulls. It really looks like the Bears are taking over, except for that SPY chart, which is interesting, right? But either way, we're going to keep a look at, on everything, eye on everything, heading over the weekend. And of course, I think it's wise to just keep up with the news, kind of what's going on, as the market is obviously very news sensitive right now. It's very responsive to what's going on in the economy, with the health situation and, of course, everything else going on. So if you guys enjoyed this video, hit that like button for me. Consider subscribing to the channel. And if you want 2 free stocks from Webull, there's a promotion down below in the description box where if you deposit $100, you get 2 free stocks, and one of them is valued up to $1,400. So go take advantage of that. Linked down below in the description box. I'll catch you all in the next video. Thanks for watching. As always, your support means the world to me. Peace out.